Hi there, welcome to the Tradescores market analysis for November 8th, 2010. Before we get started with the analysis of the charts, I want to just highlight the trading challenge that we have underway right now at Tradescores.com. There are over $20,000 in prizes. You can enter and learn more about the contest by clicking on the Play Now link when you come to Tradescores.com. And at this page, you can select the How to Play challenge rules to learn a little bit more about the game. If you want to see a full list of prizes, click on the See List of Prizes link. And of course, to register, simply click on the Click Here to Register link. Alright, I have logged into Tradescores.com. I am in the Chart Watch area, and I have selected a watch list that I have created, which has the important exchange-traded fund charts that I like to look at every week. What we're going to do now is go through each of these charts, and I'll provide my analysis, starting off with the chart of the Dow 30. Symbol, of course, on that one is DIA, which is the exchange traded fund representing the Dow 30. And it made an important break through resistance. We had been bumping up against that resistance for a couple of weeks. And of course, last week, once a lot of the uncertainty around the election and the announcement of quantitative easing came out in the market, this market was able to break through resistance. That's a good sign. Now, often after breakouts like this, you often get pullbacks, perhaps to fill in a little bit of that gap, but longer term, I think this market is headed higher, and I am bullish on the Dow 30. The next chart that we have to look at is a chart of the Emerging Markets Index Fund. The symbol here is EEM. I always like to draw trend lines on charts. It helps me understand who is in control of the market and how emotional they are. You can see that in the period from June till September, we were in an upward trend, but that trend has steepened in the last few months, indicating that investors are getting more emotional in their buying of the emerging markets. Now, right now, the market is above the upward trend line, and that means there's a good chance we pull back to the upward trend line before resuming the upward trend. Now, what's important, of course, is that the trend is up, the buyers are in control, but just recognize that there is some potential for some short-term profit taking given the recent rally we have had away from the trend line. The Canadian dollar hit par value against the US dollar in the last few days. It's running into some resistance at that psychological barrier of an even dollar value for the Canadian dollar, and that brings in some profit taking, but we should note that the buyers are in control. The bottoms are rising from left to right. We are above the trend line, so there is some potential for a pullback here, but the trend is up, and I think we should be optimistic with the Canadian dollar. The next chart is the chart of the gold ETF, GLD. It certainly threatened the long-term upward trend line a few days ago, but it bounced off of that trend line nicely. The upward trend remains intact. You should note, however, that the market for gold has again run away from that upward trend line. That increases the chance of a pullback on some profit taking, but there is no sign of weakness here. And I am bullish of gold, although cautiously so, given the emotional buying in gold as evidenced by the market running away from that upward trend line. The Canadian spec market is the hottest market, perhaps in the world, certainly in North America. It has been going straight up for a number of months on the strength of gold and now energy contributing to that strength. This market is emotional. It is getting a little bit overextended to the upside, but there is absolutely no sign of weakness here, and so we have to ride that trend as long as it is underway. Just be cautious with some of these stocks, as this market can cool off very quickly, although typically it does not cool off until sometime in the spring. I would look towards March or April for that. We may have a pullback along the way. Oil is trading at its highest price that it has seen in some time. You can see that we had resistance there. We broke through that. Buyers in control as we have rising bottoms. This market looks like it wants to go higher, although expect it may make some gyrations on the way up, ultimately toward this longer-term resistance set back in May. The run on the NASDAQ 100 has been very positive as well. You can see it too has been going straight up for the last couple of months. That upward trend line is linear. That means there really isn't a lot of emotion, although it may feel that way. But until that upward trend line is broken, I wouldn't be too worried, and recognize that this is really a straight upward move. A break of this may simply be a pullback in a longer term upward trend. I remain bullish on the NASDAQ stocks. I think this chart of the S&P 500 is a good example of why the market will probably stall after its recent strength. Yes, the Dow has broken through resistance, and certainly the Nasdaq is well beyond resistance, but the S&P 500 is really just touching that resistance, and so expect a little bit of a stall here, but ultimately, given that the trend is up, the momentum is higher, I expect these stocks to move upward in the months to come. The upward trend looks good on the TSX, certainly not as exciting as the TSX Venture or as the Nasdaq, but we have broken through resistance recently. The bottoms are rising. We have run away from that upward trend line a little bit, which always makes me cautious that we may get a pullback before it goes higher, but I do like the way this market is moving up, and I remain bullish on the TSX market. I have been bearish on treasuries for some time. The reason was simple. We broke the upward trend line from a falling top. That is a sign that the sellers are taking control, and they really have taken control of the 30-year bond as this market has been moving lower, and I expect that trend to continue, although there is some support in this region and we may get a bounce in the treasury. That would sort of coincide with some pullback, at least on the short-term basis, in stocks, but ultimately beyond just a few days, this market probably continues lower while the stock market probably continues higher. The US dollar has shown a little bit of strength over the last 2 days, but it has failed to really even test that downward trend line, and we shouldn't get fooled into thinking that the US dollar is bottoming. When you look at this chart, you can see that it really has a lot of work to do to overcome that downward trend. So you may see a little bit of strength in the very short term, but unless we get the market starting to form a rising bottom and starting to work on breaking that downward trend line, I wouldn't get too optimistic about the US dollar in the global currency market. The ETF on the VIX index is a good indication of whether there is fear in the market. The trend here tells us that fear is quickly going away, and I would submit that investors are growing more confident about stocks. As we can see, until this downward trend on the VIX is broken, it looks like confidence is building. That is a good sign when you have an upward trend and confidence is building. It means that investors are not only optimistic, but confident in their optimism and its validity. Well, that has been the Tradescores market analysis for this week. I hope that you've enjoyed it. A reminder to give the Money Talks Tradescores Challenge a try. Go to www.tradescores.com and click on the Play Now link. Have a great week in the market and trade well.